Ladies and gentlemen, good day and welcome to Q1FY24 earnings conference call of Arman Financial Services Limited, hosted by JM Financial. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Akshay Jain from JM Financial. Thank you, and over to you.
Thank you, Yashasri. Good afternoon, everyone, and welcome to the 1QFY24 earnings conference call of Arman Financial Services. First of all, I would like to thank the management of Arman Financial Services for giving us this opportunity to host this call. From the management team, we have Mr. Jayendra Patel, Vice Chairman and Managing Director, Mr. Alok Patel, Joint Managing Director, and Mr. Vivek Modi, Group CFO. I would now like to hand over the call to Mr. Patel for his opening remarks, post which we can open the floor for Q&A. Thank you. Over to you, sir.
Thank you, Akshay, and welcome everybody. On behalf of Arman Financial Services, I extend a warm welcome to our Q1FY24 earnings conference call. With me on the call, we have Vivek Modi, the Group CFO, and representatives from the Investor Relations team. I hope everyone has had an opportunity to go through the results, press release, and presentation for the quarter ended 30th June 2023, uploaded both on the stock exchanges and the company's website. Over the past decade, the microfinance industry has experienced noteworthy expansion and changes across dimensions, including consumer engagement, technological integrations, and regulatory frameworks. Serving as a catalyst for advancing financial inclusivity objectives, this sector has taken on a pivotal role in extending financial services to the underserved or unserved low-income class in India, as well as extending microcredit support to small and medium-sized enterprises, all while aiming to foster economic and social progress within the nation. During FY23, the microfinance industry has demonstrated remarkable resilience and determination despite global and economic challenges. This indicates a complete rebound from the challenges posed by the COVID pandemic. With substantial growth of the industry and a positive first quarter, it highlights the path of progress supported by well-established regulatory standards that foster a fair and balanced competitive landscape. As on 30th June 2023, the assets under management of the company stood at 2,147 crores, resulting in a growth of 54.5% year-on-year and 10.3% quarter-on-quarter. Of this book of 2,143 crores, our microfinance business contributes about 84%, MSME about 13%, and two-wheeler about 3%. Interestingly, it took us 30 years to achieve an AUM of 1,000 crores, but remarkably, we managed to double our portfolio to 2,000 crores in just 18 months. As we often emphasize, we have fared fairly well navigating through different types of crises and emerged with increased strength and resilience. Our disbursement grew by 41.6% year-on-year to 537 crores. This expansion can be attributed to positive credit cycles, favorable regulatory policies, and our geographical expansions that we did in the first quarter and also the last quarter of previous year. Last year, we ventured into untapped geographies of Bihar and Haryana, both of which yielded positive outcomes. Building upon this, we have also now are expanding into Jharkhand for the MFI division and Telangana for the MSME division. In addition to this, we have also inaugurated a new zonal office for North India, which will be located in Uttar Pradesh, in Lucknow. In the quarter, we opened 7 new branches, bringing the total branch count to 343, with a workforce of about 2,900 employees and a customer base of almost 7 lakh across 10 states. We are dedicated to further expanding our presence within these new states and plan to open several new branches before this fiscal year ends. In continuation with our branch expansion, We are committed to the ongoing technological investments through digitization, automation, and process enhancements. Last year, we integrated new LOS and LMS systems and also transitioned to fully paperless operations, and this has improved our efficiencies and also, more importantly, enhanced our customer experience. We are also graduating MFI customers to cashless e-NACH collections in the new IBL segment. We'll be rolling out Aadhaar-based digital signatures for all our customers in the coming to next quarter. We are positive that these efforts will make our company poised for the next stage of strong growth. In terms of asset quality, our gross non-performing assets demonstrated a notable decline of 115 basis points year-on-year and a contraction of 26 basis points sequentially, and stood at about 2.5%. Simultaneously, net non-performing assets stood at 0.14% or 14 basis points as on Q1FY24, signifying a 20 basis points year-over-year decline. As of June 30th, our collection efficiency reached about 98%. This diligent collection endeavors of our team, coupled with rigorous underwriting procedures and advanced technology, have collectively contributing to enhancing our loan portfolio quality, nearly restoring it to levels comparable to almost comparable to pre-COVID period. Collection efficiency for our microfinance business stood at 98.2%, MSME at 98.1%, and for two-wheelers stood at 96.6%. For the quarter, cumulative provisions stood at 72 crores, which is about 3.4% of the total book. Of this, provisions for Arman stood at 15.5 crores and Namra stood at 56.5 crores. We also have a management overlay of 28 crores included in our cumulative provisions, which is over and above any regulatory or ECL required provisions. Of this overlay, 7.7 crore is for Arman and 19.9 crore is for Namra. Coming to our borrowing profile, our total borrowing for 30th June stood at 2,161 crores, including the debt component of OCRPS and CCDs of 48 crores as per Ind AS guidelines. The debt to equity ratio stood at 3.4x. The company has successfully been diversifying its funding sources. Last year, the company raised about 45 crores through market-linked debentures, and during the quarter raised another 49 crores through listed non-convertible debentures. Of the total borrowings, about 33% was through banks, 19% through NBFCs, 13% was through NCDs, 11% was through PTCs, 19% was through DAs or direct assignments, and the rest was borrowed from DFIs like NABARD and SIDBI. On the liquidity front, the company has a healthy liquidity position of rupees 294 crores, nearly 300 crores in the cash or bank balance, liquid investments, and undrawn CC limits. Additionally, the company has another 42 crores of undrawn sanctions from existing lenders. As on 30th June 23, the company is well capitalized with a capital adequacy ratio for the standalone business at 31.64% and for the subsidiary Namra at 26.32%. After successfully raising equity funding last year, we are confident that these resources will play a pivotal role in achieving our targeted growth in the coming quarter. Now, throwing highlights on the key consolidated financial numbers. For Q1 FY24, the gross total income stood at 149 crores, registering a growth of 89% year-on-year, and the net total income stood at 85 crores on the back of AUM expansion and improvements in yields. The NIMs for Q1 FY24 stood at 13.4%. Profit after tax grew at 154% year-on-year to 40 crores. This was again mainly on account of improved interest income, optimization of operational costs, and of course lower provisioning requirements and improved asset quality. Cost to income for the quarter stood at 26% as compared to 37% over the same period last year. Yield for the quarter stood at 25.9%, registering a growth of about 170 bits over the same period last year. As on 30th June 23, annualized return on average AUM stood at 7.8% and return on equity stood at approximately 37%. To summarize, we are positive that the current credit cycle and regulatory environment is favorable to the industry and the company, and this growth momentum will continue. Our strategic emphasis remains on the technological advances and the expansion of our branch network to drive the next phase of growth. With this, I would request the operator to open the floor for any questions for any questions that anybody may have. Thank you so much for your kind attention and opening the call up to Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Amit Mantri from 2.2 Capital. Please go ahead.
Hello.
Yeah, hi.
Yeah, hi, Alok. First of all, congratulations to the entire team on a great quarter. So my question is, this Q1 tends to be seasonally a weak quarter for the MFI business. Yet Arman has had a very good performance in terms of even sequential growth. So what's driving this strong growth that we are seeing even a otherwise weak quarter?
So see, as far as the profits and stuff are concerned, that is reliant a lot on the business you have done in previous quarters. Very rarely does it impact, specifically whatever disbursements you do in any single quarter. Largely the income that you'll earn will be in the following 7 or 8 quarters. So, as far as disbursement, of course, we had a decline from Q4 to Q1, if you consider that. And that is for a couple of reasons. As you said that, historically, of course, Q1 is slightly slower. Demand is slightly slower. Of course, on top of that, you are doing a lot of housekeeping items, a lot of transfers, a lot of new branches, a lot of system changes and other aspects. But largely also the impact this quarter on the disbursement was due to the fact that renewals were much lower, and there's a very good reason for that. So during the second wave of COVID, which was in March of 2021, so we stopped disbursements in March, April, and partially May. And so the renewals that you would expect as loans end and people come in for fresh disbursements, those were largely absent during the last quarter. So of course that would also have an impact on the total disbursement.
Okay. And in terms of the geographic expansion into newer states, now you're already fairly diversified for the current AUM that you have. So now would the focus be on just increasing presence in the states that you're present in, or would you still continue to enter new states even over the next 1-2 years?
So the plan is to continue both, so expanding in existing states and also consistently evaluating when it is the right time to jump into a new state, right? Because specifically microfinance, now we are reaching a stage where you can visualize that in 4-5 years the growth might be tapering off and the penetration levels will increase. So I think it's important to strategically kind of plant seeds before it becomes very difficult to enter into new areas. It's probably a good idea that wherever you can expand into, you do make that call for the long run and go into. So that being said, we are usually very, very careful about where we go into. And usually there are large discussions and, a lot of analysis and data and visits that we do. It's not that we only go any place on a whim. These things are very sort of well planned before we do it, and a lot of discussions happen around it. So yeah, I think to answer your question in short, is the combination of both.
Okay. And third, a data question. So of the disbursements that have happened post the second wave, what's been the collection efficiency on them? Like you mentioned, up from say May 2021 onwards, post that the disbursements that have happened, which are probably around 2,000 crores plus. So what's been the collection efficiency on that?
About 98%.
Okay.
So, essentially, most of the book which you are seeing has been generated post COVID only.
In fact, Amit, if we kind of split the pre-COVID into two sizes. First is the pre-COVID before March 2020. There is nothing that is left from March 2020 when it comes to microfinance in particular. And between second wave, first wave to second wave, the overall microfinance portfolio, because again, microfinance portfolio is typically a 24-month cycle portfolio. What you have outstanding is less than 1% or 1.5% of the entire AUM of microfinance.
Right.
Okay. Got it. Thank you very much, and good luck for the future.
Thank you. Ladies and gentlemen, to ask a question, please press star and one on your phone now. We have our next question from the line of Akash Mehta from Capaz Investments. Please go ahead.
Hi, sir, and thank you for your opportunity. I had two questions on individual business loans. So we've seen a lot of traction coming in this. So in coming quarters, how much contribution will this make in our AUM?
So we start off as it's about 2% overall micro. Okay. So yeah, I think to answer your question, it's about 2% of the microfinance book at the moment. So largely speaking, on a 2,000 odd crore book, presently it's about 40 to 50 crores. So it's not a very, very large book. The idea here is to, again, we are basically getting future ready. So what I mean by that is that overall the prediction is that as microfinance progresses, strategically it will shift from more on a group-based loans to individual-based loans, and in that case you will have to rely more on cashless collections versus the doorstep collections that we do right now. So while it is of strategic importance for us right now, it is not of business importance for us. The answer is that going forward in the next 4 or 5 years or so, I think if my prediction is true, it will be a very large portion of the book. If not, anyway, it's not. We are just being future ready at this point.
Good, sir. And just on the same front, what would be the average ticket size and what are the kinds of yields you'll be charging?
So the yield is very similar to microfinance right now. So it is about 27%. And the ticket sizes range anywhere from, I believe, 65 to about, right now on average it's about 75. We are not going over 75. But there is a desire to increase that as time goes on and as the experiments goes on.
Okay, sir. I think that helps. Thank you.
Thank you. We have our next question from the line of Rohit Mehra from SK Securities. Please go ahead.
Yeah, thanks for the opportunity. So my first question is, we have expanded in the new state. So how is the response from Jharkhand and Telangana? And also, how is Bihar performing? What kind of book contribution do we expect in near term?
Yeah. So, I mean, we have just moved into Jharkhand and Telangana. It's too early to tell, to be honest with you. I mean, very few I think in the MSME in Telangana, we have only made last month, I think 12 or so disbursements, if I'm not mistaken, Vivek.
Yeah.
And in Jharkhand, I don't think we have made any disbursements or very.
Last quarter we haven't in July.
Last quarter we haven't. July we started doing it. So it's a little too early to tell, to be honest. The ones that we went into before that, which is Bihar and Haryana. So Bihar has been performing extremely well. And Bihar today now stands at the largest concentration of microfinance in India at this point. So earlier it was Tamil Nadu. Now it is Bihar. So Bihar has overtaken Tamil Nadu. And frankly, by the numbers, it is one of the best places in India to do microfinance. I mean, going by both Emon and COVID and post-COVID, the asset quality is phenomenal. But we are, anytime something is too good to be true, you always want to make sure that you pay more closer attention to it. And so that's what we are doing right now. And while it's possible to open lot more branches in Bihar, we are kind of waiting and watching at this stage. It sounds, I know it sounds kind of like I don't have confidence on Bihar, and that is not true at all. It's just what I'm trying to say is that Bihar as a market has grown very quickly, very fast. So it's prudent for us to kind of just take a breather and wait to see how what the reaction is going to be. So that is Bihar. In terms of Haryana, it's kind of mixed results. So the asset quality is good, but the volume of business being generated through disbursement is not as high as we had anticipated. But it is what it is.
Okay, that's perfect. In the same front, with the current upcycle in the microfinance industry, what kind of AUM growth do we target?
We don't give out targets except to say that we typically have a CAGR of about 35 to 40%. That will continue to be our long-term target for at least the next 3 or 4 years.
Yeah, thank you. Okay, that's it from my side. Thank you.
Thank you. We have our next question from the line of Yash Mandavewala from Mandavewala Family Office. Please go ahead.
Hi, Alok. Congratulations on a phenomenal quarter.
Thank you.
So, Alok, just a few questions from me. So, firstly, one thing that I've noticed is that, the average salary cost per employee for some of our peers, the larger MFI NBFCs are significantly higher than us, almost 50-60% more. So can you elaborate on, why this might be? Is it, are our field force employee salaries not competitive with the market, or, is there something else?
I don't think so that is the case. I don't know where you are getting the data on the average salaries. But I would be
dividing the employee cost. You give the employee number and the employee cost as well, and most of your peers do as well.
Okay. I don't know. I don't think that is the case. Might be some nuances with the numbers and the reporting and other things. But certainly there is not a 40, 50, 60% difference. There might be a 10 to 15% difference here and there from different companies. But I don't know. I would be curious to look at the numbers that you are looking at.
Sure. But on the field force, there is nothing, sort of the salaries are not much different from the industry.
No, I mean, there are, so our overall salaries might appear lower, but then for older employees, we have a fairly generous ESOP program. which creates a lot of wealth. So, I mean, it's dollars and cents wise, I think a lot of employees have done much better at Arman than they would have at our peers, if you count the complete package. I would say that we are probably right around average or maybe slightly below average of what we pay out. But certainly I would not say that we are 50-60% below. I don't think that is quite possible.
All right. Maybe we can maybe connect offline, and I can share the numbers from the deck and the other company's decks, and we can have a conversation around that.
Sure.
Just another one. So on the board meeting this time, there was a provision for a fundraise as well. So if possible, can you give some more thoughts on that, and when we will look at potentially raising these funds?
No, yes, this is something that we always do every year. Historically, if you look at it will be the same, that we always take enabling resolutions for both NCD raises and also for equity raises as much as so. Specifically for QIPs only, I believe. For private placement, it's not possible to take enabling resolutions. You have to reach out to the shareholders as and when the time comes, which is of course a very time-consuming process. So the purpose of taking enabling resolutions is just essentially that if there is an opportunity, usually those opportunities come and go quickly, and it's convenient administratively at least to have those enabling resolutions and approvals in place. Now, speaking specifically of your question about fundraising or equity fundraising, I mean, we just raised, as you are well aware of, we have just raised about 115 crores about 11 months ago. And, we are at a debt equity ratio of what we make, about 3.7 or so, give or take. So, we don't exactly need equity at this point. And of course, we are adding a lot of internal accruals to our net worth. So as long as those accruals can keep up with our growth, we should be okay. Now, the disclaimer here is that, right now is a good time. If there is an opportunity available, I'll probably consider it, So, I think I learned the hard way in my own experience about that equity is rarely available when you need it. It's only available when you don't need it. So on a lighter note, that's the life lesson over there. So we'll see. But nothing at the current juncture, nothing on the table at this point.
Makes sense, Alok. And congrats again on a great quarter. Thanks.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. We'll take the next question from the line of Amit Shah from Ace Investments. Please go ahead.
Hi, sir. Sir, I have one question. Sir, currently microfinance segment contributes a major chunk of the portfolio. So do you have any plans to diversify the order book?
I mean, microfinance has become a large chunk as a function of its growth potential. So I think people who know a bit of our history will know that for the longest time our bread and butter was two-wheeler financing, which has now become about 3-4% of the book total. So that it is, we don't have anything too crazy on the horizon right now. We would be considering products which kind of fit our overall rural strategy. So of course, I know I've been talking about stuff like micro LAP and stuff for a while. So that is something that we can go into, and certainly there is a desire to do it if it's feasible. We have tried to do it in the rural in the past, to be honest with you, but the paperwork has been challenging. Just its availability to actually do a mortgage in the rural segment has been a challenging part of starting a business like that. So let's see. I think as we go on and as microfinance expands, what will happen is that the growth will start tapering off and the other businesses like MSME and individual loans will start growing. So in the long run, my guess is that the weightage which you'll see in microfinance will naturally start trending downwards and be replaced by other higher growth businesses.
Okay, sir. Thank you.
Thank you. We have our next question from the line of Savi Jain from 2.2 Capital Advisors LLP. Please go ahead.
Hi, Alan. Can you hear me?
Hey, what's up? Yeah. What's going on?
I don't know if I've missed that, but I just wanted to know about these senior management changes that you have announced. If you can just tell me something about that.
So, I mean, I think this was a while back, right? The Chief Operating Officer. The Chief Operating Officer?
No, the other one. HR head and internal audit.
HR head is here only. So Ravi is still here. He's going to be here for a while now, for at least the next 6 months. But he has expressed a desire to relocate to a foreign country, and so we are preparing for that. That's it. So there is no resignation from Ravi at the moment.
Okay. And I think there's some internal audit head that you have.
We have hired. So basically, internal audit was a function of the CRO.
Okay.
It fell under the CRO. We have essentially split that now. So CRO, whenever we do replace, will be a separate function, and audit will be separate. So it will not fall. So this is a brand new position.
And these ESOP programs, these are aimed at till which level of employees? The new programs that you have.
All employees. The employees that have been with us for over 2 years. So about 700 plus employees would be eligible from anywhere from 40 shares to 4,000 shares at the highest level. Average would be about 300 shares, I mean. So we have made it very...
Okay. This includes branch level employees also?
Yeah, it includes field officers also.
Okay.
Includes office boys also.
Okay. Great. Best of luck.
Thank you.
Thank you. A reminder to participants to press star and 1 to ask a question. We have our next question from the line of Karan Mehra from Mehta Investments. Please go ahead.
Hi. Thank you for the opportunity. A couple of questions from my end. Can you help me with how many customers are unique to Arman, that is new to credit, and Arman plus one lender?
Yeah, so I mean, I can tell you that at the time of disbursement, about between 20 to 30, let's say about 20% or so, 20 to 25% are either unique to us or new to credit. But of course, once you give the loan, I have no idea that who they may or may not borrow from. So I wouldn't know on a portfolio level, but at least on a disbursement level, that's where it stands today. So let's call it about 20%.
Understood. One with regards to provisioning. So will we continue with our stringent provisioning policy? And what are the total provisions that we have as of now?
73 crores, right? About 3.5% of the portfolio is what our current provisioning is, which is slightly more than we need from both an ECL and regulatory reasons for the board.
RBI prudential.
I mean, there is a management overlay on that, so there is a bit of a slush fund, and I know people do like and appreciate creating provisions over and above. I know people do like creating provisions over and above what is statutorily or what the CAs kind of require us to do. But I mean, these are all being an accountant myself, when you run into trouble, it's not going to be any accounting accrual reserves that is going to come to your aid, right? It's going to be cash liquidity and it's going to be equity. So, I mean, to me, I'm kind of neutral about creating provisions because, I mean, it's an accounting line. But then so is reserve and surplus. So you can always use that too against write-off. Of course, the main benefit is that it smoothens out your P&L during crisis. But other than that, I don't think it helps you much besides that. But of course, I reserve I'm in the minority of this opinion. But we'll continue to create a management overlay also.
Okay. Can you help me with the write-off number that we took this quarter?
The laptop number?
The write-off.
Write-off number.
The write-off was approximately 10 CR.
Give or take, yeah, 10 crores.
10 crores.
Okay. Thank you and all the very best.
Thanks.
Thank you. We have a next question from the line of Jigar Shah from AK Securities. Please go ahead.
Yeah, thank you, sir. Thank you for this opportunity. I have a couple of questions. So, what would be the average cost of borrowing for the quarter? And in the MSME segment, we have yields of 36% plus. Are these sustainable in the medium term?
It's sustainable in the short term, probably in the medium term as well, unlikely in the long term. So, I mean, as competition increases, that you should expect that to probably come down. But that being said, with the few players that are operating in this segment, and remember, MSME is a very, very broad term. So, even like certain loans that we take from PSU banks at 50 crores is also falling under SME or something, So the range is like between 50,000 to 50 crores people classify sometimes as MSME. But at the level that we are doing it, our rates are not very, very different than, that a lot of our competitors are doing. So I don't want you to get the idea that we are an outlier in terms of rates. We are probably around average. So this is a kind of a high yield business. And it's high yield because it's a high OpEx business. The operating costs are much, much higher in MSME than it is in microfinance, for example. And you are doing doorstep collections on an individual level instead of on a group level. So that also increases your expenses. You are doing a much more stringent form of credit from a completely separate team. That increases your cost. The type of people you have to hire is obviously a lot more qualified. And theoretically, although I have not experienced it, but at least textbook-wise, it's slightly more riskier also, is at least what they claim. So the yields are basically a function of all of that. Number one, low penetration and low competition. Number two, it's high OpEx, and number three, higher risk apparently, but theoretically.
Got it. Thank you, sir. This helps. And I just had another question, like what would be the average cost of borrowing for the quarter?
Average borrowing cost will be, all-inclusive cost would be about 12.5 or so.
About 12.5. In fact, this quarter, since the larger part of about 70% of borrowing was from PSU banks.
Right.
pretty good.
But the interest rates in the market have been going up, so I'm sure you are aware of that.
Yes, yes.
What we could borrow it at 22 versus what we can borrow at 23, even though our ratings are better, overall costs in the market have gone up significantly for, reasons that I'm sure you guys know better than I do.
Got it, sir. Thank you so much.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to management for closing comments. Over to you, sir.
Thank you so much. Thanks to everybody for joining. It's a good quarter. I think hopefully we can keep the run going, and I thank everybody for their support and very insightful questions. Thank you so much.
Thank you, sir. On behalf of JM Financial, that concludes this conference. Thank you for joining us, and you may now disconnect your line.